Welcome back everybody into another trade setup review, and we left yesterday with this previous chart. We analyzed this and the whole bearish trend into a bullish one, and we're going to move to the next one. So let's start and let's see that, as you can see, the whole session of New York. This is actually after New York. This is late, and because this is the FOMC date, we can see that the price was staying in a range, was in an order block, and not doing anything. Of course, I'm not even looking at any trade idea over here. That's mainly because there's a huge catalyst happening exactly at 8 p.m. So that's when the price action actually starts to develop. So any trade over here would be just mainly a gamble, trying to predict where the price will go, and not a very good habit of doing it before such a big news. So what we can identify is that price, of course, is in a consolidation period. We have a brief spike up, but as you can see, we are creating immediately a double top at our key level 2028, and we see that exactly right before the FOMC, we are seeing a support being created. Basically, we can see probably on the 1 minute, these candles are closing above these lows on the left hand side, but anyway, it doesn't really matter too much. What we can see is that we have a huge spike, bullish spike, exactly at 8 p.m. sorry, and then we see a correction. It's quite sketchy, okay, because we have our previous PSA. It's this one, is these eyes. So it can be, unless you have like a rule, like I place on myself on my trading plan, to avoid entering in like 1 or 2 minutes after the news. But this candle could have been very, very risky, because you see a very bullish spike up at the news, and then you have a retest, and then the candle is closing bullish. So you might expect that the price will continue bullish straight away, because it already did its setup, its retest, sorry, and price can continue bullish. So that entry would be absolutely a nightmare. But seeing that, as you can see, the let's see where it is, the actual 2 minutes, it's about over here. So you see these are just basically 2 minutes of price action. You can see that you have time to let the price action, the market structure, develop itself. So what we can see is that price is making a new high. Let me place it with a line. Is making a new high, and then it's making a low. In this condition, what we would like to see is either a rejection and then continuation bearish, just basically based on a technical analysis. We will only look for sells below this last low, because this is the last low after that made the new bullish price action. So as the safest entry would be below this low 2022, but of course we're talking about hypothetical thing. So we can see that the price is making a new higher low at this previous strong PSA. You can identify it, and I mean, it will be still a very risky entry, unless if this was a key level or strong for our PSA, that would be absolutely perfect. But it still makes sense. The only thing is, okay, you see that we have made a retest. It's quite sketchy to enter unless you have a clean and clear fundamental bias in mind. This candle is still sketchy to consider on a bullish side, because yeah, it's closing with a rejection at these previous highs. So it's not that the price cannot make another bearish candle and reject. So that's why sometimes it's better to let the price action develop. And I mean, the best entry would have been when seeing this price moving bullish, but this probably was very, very fast and will not give you a big opportunity to enter. Another thing is that you probably like to see some rejection, some test above these previous highs. So for example, when you see this candle and you see that this candle is continuing bullish, you might enter over here. It's 2031 and it will go 2036. So it's a 50 pip move. It will even just to go to the key level will be a 30 pips win, and you are taking the safest entry above these previous highs. So as you can see, if we are talking about a bullish price action, let me just do it like this. If you're taking seeing the bullish price action, what you want is a break above the last high. So this is a higher high, this was a higher low, and that you will take the continuation. But as you can see here, what we are looking at is that we have a strong rejection at 2034, and we can, of course, okay, let's start to see where is the price action most likely to, what is most likely to do. I remember that I took a trade, a buy over here. That's because of these reasons. I mean, if we see on the price action, I'm making a new high, a pullback, we're making a new higher high. What I'm expecting is the price to make a new higher low and then continuation bullish. What is for me in this case the best place for price to make a new higher low? It's the key level and these previous highs on the left hand side. So for me, if the price action is simply this, I mean, is like this, for me, this is a very good entry in anticipation. Yes, it's not absolutely on the dot, but we can see that the price is possibly making a trend line on the upside, and if this is a relevant PSA, I will still favor it as an area. As you can see, like this, I will still favor it as an area for the price to bounce. But as you can see, I entered, and I don't remember if I didn't have the break-even rule. So price would go around the 15 pips in profit, and then would flip and turn bearish. What we are seeing is that now, when we see this price action, we can validate this overall bearish move. This overall bearish move is very strong. It's happening from a strong key level and also I think higher time frame PSA. We are closing below these previous highs on the left hand side. We are closing below the key level. So there's a high chance that the price will at least go back to these previous lows, and that will be a winning trade more than 30 pips. So I see that this is can be a very good entry when we see this rejection, understanding the shift in market structure. So as you can see, we were okay, let's do it like this. So we were in a consolidation period, then we flipped bullish. Okay, so as I was saying, up until here we are still bullish, but when we see this price action, we see that there's a candle closing below these previous highs on the left hand side. We are closing below the last higher low. That's when we are seeing that the bullish trend line is being rejected. So this was the bullish trend line, and we can see that now we can take a retest and then for the continuation bearish, at least to these previous lows. In this case, this will still be price can still bounce from there. Let's do it like this. Price can still bounce and then continuation bullish. We can retest over here and then continuation bullish. Okay, but on the lower time frame, this entry will still make sense to take advantage of the price action. So let's like this and let's remove it. So as you can see, we could take advantage of this overall bearish move and then possibly expect either now that the price is making a new low below this last PSA, I might expect price to let's see, to retrace. If it's not exactly over here, it's maybe it actually is reacting over there, and then the continuation bearish, or I want to see if we have some further bullish continuation above these levels. So I have these PSAs in mind that I want to monitor, and of course a possible retest of this 2028. Let's see if I have the next one. No. Okay. No, yes. So this one was 2020 at 8. Okay, so I don't have the whole price action. So let's go back to TradingView. And as you can see, this is the price action that happened on TradingView. We can see it from that actual date. And we are seeing that we made a bearish, this overall bearish move. And I told you that we were monitoring these different PSAs. And we can see that the price reacted. It started at 2026, breaking then below 2025, and then making all the way up down for like more than 80 pips before bouncing back and then going into our consolidation period. As you can see, 2026 is exactly this previous PSA that I was highlighting. So I had this one or this one in mind, and eventually 2028. But we will probably, you will see this movement, then breaking below, and then the continuation down to 2018 before coming back up. So that was a very good idea, and there's a possible also continuation in trend. After that, we are seeing now, of course, there's a lower volume, but it's also during the press conference, and that's where probably markets are a little bit more on the sideline, waiting for something, waiting for powers to say something very specific. What we can identify is that we are in a consolidation, and we are expecting these lows at 2020. We are failing to break below, but we are also failing to break above. Seems like there's not a lot of volume, but of course we are talking about a 30-40 pips range between 2020, 2019, 50, and basically 2023.7. And that's where we could have had a breakout of the order block, also a retest of the order block. Still very, very low volume. Of course, it's getting late into New York, and yeah, probably the only action would be this breakout, but for me it's too late to take, and it's a very special occasion. I mean, it has only volume in the chart because of the FOMC, and still we can see that the price is now confirmed to make a new high, and we can see it over here. Price is making a new high. It's then making a correction. This is more or less 75% of the retracement of the bullish move, because yeah, basically yes, it's a 2/3. And why we are looking at a retest on the bullish side, that's because technically price just made a new high, so that's why we are expecting a new higher low. So that will be the first high risk, high reward entry. Or then simply technically you want to see price to break above the last higher high, retest, and then continuation up. So as you can see here, that's when price can give you this opportunity. We are breaking above, we are retesting, and then we are continuing up. So that's why this break of exactly the key level 2028 again, it's the actual safer entry above previous price. Okay, so that will be the safest entry. You will see that also price will give you another retest of this same PSA before making a new higher high. So this is the PSA, and this is the new higher high, new higher low, and then going up to make a new higher high. Let's move on. As you can see now, we are in, okay, this is London, and then we're coming into New York. That's a very okay. Let's analyze it because it's a very counter trend. Let's just give me a second. Okay, so let's analyze it based on the market structure from the left to the right. So as you can see, price is making higher highs and higher lows. Because if you're trading in London, you have multiple retests, multiple taps of this previous PSA. You have multiple entry opportunities, especially the first one, which is a clean break and retest. Your entry with 15 pips stop loss will be absolutely safe because your stop loss will be anywhere around, it is 2034, it will be 2032.5. The stop loss will be over here with your TP 37 will be around over there. So of course it's not a very good scalp because it's it's not counting as a scalp anymore because the long time that will take, but as long as when you place yourself in this position, you just have to stick about it and stay in it. And yeah, you could even risk only 10 pips, but that's part of the plan. You see that the momentum will keep going. So after this possible entry, we can see that simply analyzing the market, okay, we make a last tap and then we make a new higher high. We can see that the price is making a new higher low and then making a new higher high again. So it's now there's a lot of momentum, a lot of volume, and you can see that the price went more or less 60 pips from our entry, and we are seeing a correction. This correction does not have to put you off because if you're looking at the market structure, the last higher low is this one. You might also consider these ones, but these, for example, are only minor higher lows, and so it's not really matter. You could have probably entered over there, and that would be probably a loss, but that's more something that you do when you expect price to then continue very aggressively, so during high volume time and not in the middle of the London session. So it's something that you can do during a New York session, expecting a price to bounce from there at least 20-30 pips. But you can see now low volume. Still, you're not into a bearish side, you're not moving into a bearish bias until you see price clearly breaking below the last low and then probably going to retest the next higher low, which is this one. So unless you break below here, there's no real reason to stay on the bearish side, and of course if you want to stay to be safe, something that I really like to do is, okay, see this bounce, and when do I see it validated, this new higher low? I see it validated at the break and retest of the next PPL or the break and retest of the previous next PSA. You see that the price is giving you multiple opportunities to enter anywhere. So this is a risk I would take in anticipation. Safer entry at break of PPL. Safest above PSA. Okay, like here and like here. Here the price action is quite messy, but it still is pushing and making a new higher high. So then what are we seeing? We are seeing during the pre-New York and coming into New York, we are seeing a strong bearish correction. It's strong in sense of the amount of the correction, but it's not very strong in direction. It's not that aggressive. It's not coming back very aggressive as we can see sometimes during New York, but we are seeing a correction. It's quite structured, but it's not really, especially at the start of New York, it's quite messy. We have candles closing below the last higher high, but still no price action confirmed and a very messy price action. We can still identify that slowly, but we are making our way down into a bearish downtrend. But still, the PSAs that I want to see broken are the same one that I used as a reference on the buy side. So for example, this is the last, second to last, this is the last. Last high, high, high low, and this was high. Okay, so this price action gave me good price sensitivity, good reactions and price points. So where do I want to see a possible entry? When do I validate the entry on the bearish side? Since I don't trade the trend line, I would probably see after prices breaking below, after prices keeping the lows, probably when this candle closes bearish below these lows, sort of signaling the strength of the of sellers. Probably this entry will be okay, or I will wait below these lows. So for example, in this case, the price action is very aggressive. I don't know if there was any news, but I will only wait for this, or as you can see, a break and retest after the momentum is clearly showing. We are closing below over here. We are closing below this last higher low, which was the trade idea that was doing London. And that's where we could take our trade from 2036.25 down to 2023.75. So as you can see, it will not even be at 30 pips, and will be missed by a few pips. That's because we are we are tapping into the last, not the last, but another one, another higher low. So that's where we can see the reaction. That's what I was talking about yesterday, that sometimes these entries are very risky because our TP is below, it's betting on the break below the strong PSA, and that doesn't always happen. So this entry will be okay. Best entries will be anywhere around here when you see there's volume coming back into the bearish side. As you can see here on the lower time frame, when you see and validate this price action, that's when, as we did here, exactly as we did over there, I'm not immediately entering over here, but when I see a break and retest of this previous PSA, the same higher low is being retested on the bullish side, and we can see also this candle confirmation over here. That's where we could possibly have a safer entry on the upside. In this case, again, 2036.5, 2038.5, it's only 20 pips. So even in this case, I'm betting that this entry, of course, the best entry will be over here, 26.25, will be, yeah, we are betting again that the price will break this high, or at least make a top wick, which will actually happen, but it's still a little bit risky. And yeah, that's a little bit of the part of the risk, because I don't know if that will be tapped anyway. So for example, now what we would like to see, we would like to monitor this price sensitivity area. Okay, I would like to monitor this price sensitivity area to see if we break, maybe we go above, but then we break below and we go on the downside, or if we show some strong bullish price action and then the continuation up. We have a lot of price sensitivity areas on the left hand side, to be broken on the bullish side, but still that's what we want to monitor. And let's see if we have actually the next trades. Okay, so as you can see here, that's exactly what happened. What we were looking for was exactly this one. So we are seeing that this price area that we were looking at is being respected. There you clearly see that there is no strong bullish price action. There is no strong candles that are closing above this area. So that's when you have your bearish confirmation over here, and that will go for your 30 pips, or even over there with the new 4-hour candle. Still, I started not to like this price action. So for example, I will not be able to enter sells over here. Why? Because I am seeing already a couple of rejections, and seeing this rejection, unless we clearly break below now, I will not be able to take another retest over there, because we are basically in another block situation. In a consolidation situation and not anymore in a strong bearish price action. Still, yet we are respecting a bearish trend line. But let's see what the price is about to give us. Okay, very next candle. And the price is actually and finally breaking below. So that's what I would love to see. And I will be careful about the possible reactions over here. If we have a strong bearish candle and then a retest, then we can take the continuation bearish. Otherwise, that will be a very, very messy. Okay. So this is actually the price action after a while, 2034. So we can see that in just a few minutes, price bounced probably from there or over here, and we were back at 2045. So let's see the price action on the 4th, so the following day. Okay, so we can see that the price action finally made this move, broke actually below 2034. We retested, and yeah, an entry at the key level will still be profitable, I would say, by a little bit. But yeah, even there, if that's the that's probably a PPL. Yes, from this level, that's when you can have your trade. Will be quite clutch as a profit. But anyway, you can see that with New York Stock Exchange open, price just skyrocket up bullish. And yes, we have some reaction at 2039, but then we have a clear candle closing above. This is 344, which we don't have it over here on the chart. We can see we can have a break and retest over here, but mainly I would be looking for entries above this level, which I don't know if it gave opportunities or not. So let's see what the price action gave us, what other opportunity gave us. So we are looking in a strong bullish momentum, as you can see here, which is dictated by higher highs and higher lows. As you can see, especially you can see that price is respecting these lows. So that's where you could have your high risk, high reward entry. The only thing is that we are just below a key level, so that's a little bit sketchy, but still it's a high risk, high reward entry because we are in a very strong bullish momentum and you are breaking above all the other PSAs. So it's also after 10 a.m. So you have this price action. This is also the safer entry. You can see it over here. Why? Why is this the safest entry? Because you are seeing that the price is making a new higher high. Anticipation. And that's an anticipation of the new higher low. Then again, same thing, break and retest of the higher high in anticipation of a new higher low. And again, same thing, very straightforward price action. We can see it over here, entry above higher high, new higher high, higher low, higher low. As you can see, this higher low, let's see, yeah, it's tapping not exactly the PPL, but still, if you miss this one, the price is now making a new higher high. So as you can see, that during all this time, there is no real reason to short, because if you simply count the number and you see how big the bullish candles are, it's just simply, you need to stick with the trend. So there is no real reason to take any sell. And for example, here we have a clean break, clean retest, end of pullback at the same PSA, probably expecting a new higher low, which will still give you more than 30 pip scalp. It's a big volume time. Okay, so now that we are seeing that we have this last higher low, let me delete all the previous ones. Okay, we have this is the last higher low. When do we shift into a bearish bias? Because we are seeing now that there will be a correction. So let me do like this. Okay, so we shift when we see price clearly breaking below this new higher low. For example, in this case, an entry over here will be very risky. I will probably take it, an entry, and that will be a loss. That's because I will not be looking on the left hand side to see that we are probably, we might still respect this low. So I should enter into a bearish bias, but still probably wait for a better setup. So for example, entering at 50% would make sense, but you can see that there's a PSA on the left hand side. That's where the actual price can react, not just 50% in the middle of the area. So I would probably wait for either this PSA to be tapped, or for this level to be broken, or even after this price action, I would love to wait to see a break and retest over here for the continuation bearish. So still, this is the best entry at the 61% retracement, but it's mainly because of these, not about the number, but about the PSA. So also looking at, okay, where is the price most likely to react compared to what is the number that is going to react, because price reacts to PSAs on the chart, not just numbers. So as you can see, yeah, you enter, you might not be completely happy. That's 56, that will be base almost 30 pips. You see price coming back all the way to your entry, but fails to break above, and that's where you have your continuation down. So you can see that price is actually now breaking below these previous lows. That's what this price, that's what about this trade idea was about, and that's where you have the whole continuation of the bearish move. You have to be safe now to be low, new lower high at PSA. You have to be cautious about this. Is a new lower low, yes, but where are we reacting? Okay, no, I don't want it like this, I want it like this. Okay. Okay, so let's see in the next one what the price will do at 2050, which is this one, right? Yeah, we are seeing price breaking below and making a new lower low. We're breaking below 2050 key level and this previous high. So it was this one. Let's see if I can come back exactly. It was exactly this one. It's simply that, okay, it was here. So when we have, I will not look at these breakout retests. Not be looking at this one that was highlighted, but I will be looking for, okay, price is making a new lower low. Then we have this candle closing bearish. I think it was already in the previous one. Yeah, we have this candle closing bearish and signaling as more momentum, and then we are seeing the next candles staying below the key level and staying below the previous higher low. And since we are now in a bearish trend, because we can clearly see now that the price is making new lower low, lower highs, lower lows, lower low, we are betting on a new lower low to be created. Anticipation, new lower high, lower low, lower high, lower low. And of course, we will take profit at the new lower low. Again, still have to be cautious about these big PSA on the left hand side and see what the price can do at this level. For example, over here, I will be turning bullish if we see a bounce from there or anywhere and a possible continuation bullish above this previous PSA, mainly above the 2050 or breaking above. The safest will be above this level over here. So let's see what actually happened later on during the day, the 4th of May. Yes, as you can see, the price would go down to 2043, which is down here. So it will retest these previous lows. As you can see, before coming back up, probably with a retest 2044, 2045, then a retest of 2047, and then even a retest of 2050. As you can see, would have been giving you a nice scalp to the upside. Then we would still be in a high time frame bearish trend, but you can see how yeah, that was basically the main idea. That was the safest, and this was the safe. This one was less risk, so it was something like this. Okay, so it was the perception that actually would happen before continuation boom bearish. So let's move on to the next day. So that's the next day, and we have big news. Most likely, I think it's Friday. Yeah, it's Friday NFP. What we can see is that, of course, there's a strong bearish move. We cannot, nobody can say anything about it. We have a strong breakout, and we have a 50% correction. I would say that's around 50% correction, and also tapping 2028 key level for possible continuation bearish. This will be 80 pips. Then what we see is a further continuation bearish. We don't have a full retest of this PSA 2020, but still we see exhaustion. And I think I took this entry because we didn't have the full retest. But when we see this bisection and we see a candle closing below, I mean, we're going to see it over here, we create a small order block, but when we see a candle closing below, that's when I took my entry, because okay, I'm expecting now price to continue bearish with such a strong bearish momentum, and exactly why in a few minutes price went to my TP. Then again, it's not even needed the Fibonacci tool, since we are in such a strong bearish momentum. Where is the price most likely to react and to come back? It's these lows. That's the last lower low before making a new one. So that's where I can expect price to make a new lower high. In the continuation, that's exactly what will happen, and going to tap again the previous lows. Now we are seeing, for example, we are seeing this entry that was on the sell side. Why did I took this sell side liquid sell? Because we are seeing strong rejections. This was New York Stock Exchange, and we are in a very strong bearish momentum now. So I'm waiting for the retest of these previous lows, and that's when I have it. I enter sells at the PPL. We're a little bit drawdown, but doesn't really matter. Price goes to like 15 pips. Then I place my stop loss at break even. But as you can see, my entry was never violated after that. Even if I kept the stop loss at 12 pips above these candles, I will still end up going into profits and yeah, bank on with the new lower low being created. So even if I didn't take the exact top, the fact that I understand the break and retest makes it to go to the new lower low, and it will continue to go down. It will move a lot, quite a lot. But after that, let's take a little break, and we will going to see when is the shift of this from bearish side bias to the bullish one. Okay, so as I was saying, we are in a very strong bearish momentum, very strong trend, because we are clearly making lower lows, failing to make a new higher high, and then making a new lower lows consistently. Okay, so lower high, lower high, lower low, lower high, lower low, lower high, lower low. So okay, let's have a look at it. So these are the price points of interest. So we have this lower high, then we have this lower high, then we have this lower high, and of course then we have the lower low. So when do we shift into a bullish bias? Up until when we stay in a bearish bias. So if I see this bullish momentum and I see the correction over here, I can still be looking for a possible bearish trade. An entry over here, and this entry will be 2005, will only go around 18 pips before tapping into a possible new higher low. So we are seeing now a rejection over here, and it's this rejection, the failure to make a new, as you can see over here. Now what you want to see and to be able to see, it's failure to make a new lower low, possible new higher low, validating liquidity from 2000. Because also, as you can see, if you see this price action, and then I will put it back. Look, would you sell right here? I will not sell because look how strong these candles are, how bullish these candles are. So it's not really, even though we are not shifting into a bullish bias yet, we are seeing we can start to sniff a little bit of a change. Anticipation, lower high. Okay, let's see. No. Like this. But when do we shift into an inevitable bullish bias? When we see a new higher high being created. So now we are breaking above here, breaking lower high, breaking previous lower high, possible and this is anticipation, first possible setup in anticipation of the new higher low being created, because price is making new higher highs. So that's a new higher high. And when the price then goes and make a new higher high, yes, it's not super clean, but as you can see, we have multiple retests of the previous lower highs. Retest of the previous lower high, which can give you the opportunity of re-entering, entering further trades, and then again, yes, you have some reaction over there. You have a break above the last lower high, so that's very important. Breaking above lower high, new higher high, anticipation of higher low. So we have these possible entries and these possible entries. Trying to understanding clearly the new, what is the price action and market structure telling you. So let's see if then price will continue bullish. Okay, these entries, yes, we'll continue for more than 60 pips to make a new higher high. And yeah, that was a sound way to shift the market structure. As you can see, you have all these taps of the trend line and relevant PSA. So that's added confluence, key levels, and tapping of the trend line. So I hope you guys enjoyed, and I'll see you next time.